Hi everyone, welcome to BlockSnack, your daily crypto wrap-up for Saturday, April 25th, 2026. We break down Bitcoin, Ethereum, and blockchain news, fast, clear, and without the hype. I'm Jack, and I'll walk you through what matters today. If that sounds useful, hit subscribe and follow the channel.
BlockSnack.
In this video, we explore crypto market liquidity concentration, Bitcoin's bullish signals, Ethereum's Pepeto presale, XRP ETF growth, DeFi privacy solutions, security challenges, and new blockchain investments. And just as always, a quick disclaimer. This content is for informational and educational purposes only and should not be considered financial advice. Always do your own research. Now, with that out of the way, let's jump right in. The crypto market is currently facing significant liquidity concentration issues. A few centralized exchanges, or CEXs, dominate the trading landscape, which poses systemic risks and regulatory concerns. Binance, for example, leads the pack with a staggering $1.09 trillion in trading volume in just the first 112 days of 2026. This accounts for about 39% of the global spot volume. The top 10 exchanges, which include names like MEXC, Bybit, and Coinbase, handle approximately 90% of global trading volume. The concentration of such massive trading volumes in a few entities leads to potential credit, liquidity, and maturity risks. The Bank for International Settlements warns of these risks, especially given the October 2025 flash crash that resulted in $19 billion in forced liquidations. To mitigate these risks, they recommend implementing prudential measures like capital and liquidity buffers and stress tests. Next, we look at Bitcoin, which is currently showing some promising bullish signals. According to Van Eck, Bitcoin's deeply negative funding rates and clustered hash rate declines are key indicators. The 7-day average funding rate has plummeted to -1.8%, the lowest since 2023. Historical data suggests that such negative funding rates have led to strong forward returns, with a 77% probability of positive performance. Additionally, Bitcoin's hash rate has dropped significantly, a trend that has historically been followed by price increases. In previous hash rate drawdowns, Bitcoin prices rose in 6 out of 7 instances within 90 days, with a median gain of 37.7%. These indicators suggest a reinforced bullish backdrop for Bitcoin. Now for some exciting news from the Ethereum front. The latest presale of Pepeto, an Ethereum-based token, sold out in mere hours, signaling strong market demand. The project is spearheaded by a former senior developer from Binance, and its associated exchange, Pepeto Swap, offers zero trading fees. This contrasts sharply with competitors who charge up to 0.3% per trade. Analysts are bullish on Ethereum's future, with price predictions reaching $12,000 by 2026 and $25,000 by 2028. The presale raised $9.5 million, with a staking APY of 178% and an upcoming Binance listing. Pepeto's innovative zero-fee model and cross-chain features position it as a significant opportunity in the crypto space. Moving on to XRP, institutional adoption of XRP ETFs is on the rise, led by Goldman Sachs. As of now, U.S. spot XRP ETFs have amassed $1.53 billion in assets under management, with Goldman Sachs holding a $153.8 million position. This makes them the largest known institutional holder. Despite this, retail investors still dominate, holding 84% of XRP ETF assets. The potential passing of the Clarity Act, which would classify XRP as a digital commodity, could unlock further institutional capital. This rapid growth marks one of the fastest adoption curves in regulated ETF history. Next, let's explore privacy in DeFi. OP Labs has launched Privacy Boost, a new solution aimed at enhancing privacy for DeFi applications on Ethereum. This comes in response to growing concerns about transparency and data exposure in DeFi protocols. Privacy Boost integrates privacy-preserving technologies that aim to support compliance with emerging regulatory frameworks while maintaining decentralization and user control. This innovation could be a game-changer for DeFi applications looking to balance privacy with regulatory compliance. DeFi continues to face significant security challenges, with losses from hacks and exploits far exceeding those in traditional finance. Chainalysis data reveals that since 2023, DeFi has suffered nearly $13.3 billion in losses. The Bybit hack alone accounted for $1.5 billion of losses in 2025. DeFi's loss rate is about 0.0006% of volume, compared to 0.00007% in traditional finance. Vulnerabilities in bridges, centralized exchanges, and wallets contribute to these high losses. Despite these challenges, DeFi remains a crucial part of the financial ecosystem, though it faces what some call a trust squeeze as institutional tokenization grows. Finally, we turn to investment news. 1303 has launched Crypto Fund 1, a new fund targeting investments in blockchain technologies. The fund aims to diversify into the rapidly growing crypto sector, with a focus on leading cryptocurrencies like BTC and ETH, liquid protocol tokens, and venture capital in Web3 startups. Discussions are ongoing with strategic partners such as BlackRock and JP Morgan. The fund's strategy includes market-neutral approaches to minimize risk and stablecoin investments to maintain liquidity. This launch represents a significant step in institutional investment in blockchain technologies. That's it for today. Subscribe for daily crypto news, drop a like if this helped, and share it to support the channel. See you tomorrow for your next BlockSnack.